Hi there traders, and welcome to the Key Zone Traders trade of the month for August. Now, some months are generally some of the quieter months for trading, some of the most tricky times for trading as well, because the volume dries out through that holiday season. However, this year was actually quite a good year for us at Key Zone Traders, and for myself personally, we actually had quite a few winning trades. So this month we're going to look at how important it is that even if you know the right areas in the market to trade from, you don't even need to wait for a reversal signal sometimes. So let's go take a look at the charts. Hi there traders, so I want to show you the importance and the advantage of actually knowing the areas of the market where the smart money is, and knowing where to get in and out of the markets. This is actually a trade that we took on the last trading day of the month. Now, if you know the exact areas of the market that the market is likely to react from, sometimes you don't even need to wait for a reversal signal. So this was the market on the DAX on last Thursday, the 31st of the month. Of August. So you can see here, this was the report that we gave out to our Academy clients on the 31st of the month. It had the exact areas of the market that we were looking to trade from, and it had the exact areas that were going to be support and resistance. We said initial resistance come in at 15,995 to 16,010. And the main resistance was at 16,040 to 16,060. We actually issued, via our alert service, which is another part of the Academy course, we issued a sell order at 16,000. So we had an order at 16,000. We had, sorry, bear with me. So we had an order in at 16,000, and we had a 25-point stop. And we had a 25-point target, so that there, and we had a 25-point target. That was just back down towards this zone here, just above that zone. So we trade zones. If you're going to trade these, you need to be aware of the zones around, and you just target from one zone to another. So you can see entry was at 15,995 to 16,000 and 16,010. That was our initial resistance, and the next zone below was at 15,955 to 15,970. So that was the area that we wanted to target. And we just had a stop behind the zone, a nice, a bit of a room for a liquidity grab behind the zone, but other than that, it was a safe stop behind the zone. And the market came up into, so you can see it broke above the zone, pulled back, used it as support, and then pushed higher, and came into that zone. It hit that zone of resistance, triggered us in. Now, if you'd waited for a reversal, maybe you wouldn't have even got the reversal. Even if you'd waited for this reversal, you would have been entering much lower down here at 15,985, 984, something like that. So a much worse entry. We had our order there. It just clipped us in, and you can see it moved to target within just a few minutes. This is a 3-minute chart, so within 6 minutes it had hit our target, and we was out of that trade for a nice 1-to-1 risk to reward winner. It was against the overall trend, hence why we was only going for a 1-to-1 risk to reward as well. But you can see the advantages there of actually knowing exact areas of the market that you want to trade. You can see after that, we actually meandered in between these two zones, used it as support and resistance several times. You could carry on playing this. We didn't. We just first time was the best time. The first time is always going to have give the most likely reaction, and then we moved higher. Now, as you can see from this report, we also said the main resistance was at 16,040 to 16,060, and as the day progressed, this is that area. This blue zone here. This is a main resistance zone. You can see the market came up. It tested it here. You can see it tested it here. Didn't quite get into it. If I was trading this zone, I would have my order at 16,040. So it hit 16,040. Maybe it would have missed with because you wouldn't have had the spread. But it did react there, but it still came back and gave you a second opportunity later on in the day. There you go. You get into the trade there inside the zone. And then you actually see the rejection again as well. So multiple opportunities there from those resistance zones, just by knowing exactly where you need to get into the markets, the exact areas in the market that the market is likely to react from. We can get some really good trade locations. We don't need to wait for reversals. We can identify, we've got clear areas where our stop would be, because we can have our stop just behind the zone. Again, in this case, you could have had a 25-point stop, Again, a 25-point target. Maybe even a little bit more for this one because it's a main resistance zone. You could have gone on for a 1.5 R target, and you make those returns quite nicely. So, this is the real importance of being able to identify the support and resistance zones, identify where the smart money is, know where the market's going to react from, because it really allows you to be more aggressive with your entries with much more confidence. You have clear areas of where your stop's going to be, and also clear areas to target. So it can really help improve the overall performance of your trading. So I hope that you found this useful. If you have any questions, please do just give me a shout, and I look forward to speaking to you again soon. Cheers.